afternoon. It's McCollum on Business, Thursday edition here. And boy, have we got a packed show for you. A lot is happening out there in the business world. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. And cryptocurrency is a big thing today we got to talk about out there, as well as Treasury Secretary saying some things that is putting some worry into that market yesterday, and it's continuing here today. We'll talk about that. Market Watch, stocks we're paying attention to today, as well as national and local stories that you need to know around the business world. Let's get it started. Let's get right into that Market Watch. Nothing good to say here, folks, at all, as we are looking at the market right now. Everything big sell-off happening across the world here, and in terms of the markets, and I don't know what it's going to stock, right? NASDAQ cratering for the third day. The S&P 500 down big today as well. Dow Jones as well. Let's just say everything way down today, including that last stock you see, index you see there, the Bitcoin. So right now, the Dow Jones is down 279 points to 49,172. S&P 500 is down 71 points to 6833. NASDAQ here, our link is broken, so we apologize, but I'll just tell you, down 185 points right now, 22,719 for NASDAQ. The Russell 2K, that small cap index, another big loss day for it so far, 32 points down right now to 2,600 is what it is trading at. And then there's Bitcoin. That'll be our top story today when we get to that here in just a moment. Yeah, down 6,800 technically today, but folks, it's under 70,000 for the first time since 2024. 66,214 is where it is. And worry is out there on Bitcoin. Worries are out there on cryptocurrencies. And there's a danger now with these large-scale companies who invested big into Bitcoin when it was higher. They're in the negative numbers here. You could see people dumping Bitcoin for tax losses here pretty quickly, which of course will drive down those cryptocurrencies even more, as that will happen, as a possibility of that happening out there. Well, that'll be our lead story. We'll talk about that in a minute. But first, stocks we're paying attention to while we wait for Amazon to report their earnings after the bell today. Yesterday, after the bell, Alphabet released their earnings out there, and 2.40% down right now. Obviously, Magnificent Seven stock, well watched here when they do their reporting. And it's not all down because of this big sell-off happening today as well. The company did project a sharp increase in their artificial intelligence spending. A huge capital expenditure is what they announced yesterday in their numbers. And that spooks some investors out there. People are not as sure on this capital spending numbers on artificial intelligence that these companies like this, Microsoft, coming out with there. They're calling for 2026 capital expenditures of up to $185 billion, Alphabet is, moving forward. So they did beat their numbers in terms of the, both lines, top and bottom lines, but down 2.38% today, and it's all based around capital spending there on their artificial intelligence and their growth there. Qualcomm's the next one we're going to look at, the chip maker. A lot of the chip makers aren't doing well today, just overall sell-off. NVIDIA's down and things to that, but some of the big ones we're looking at, one of them's Qualcomm, 7.13% down right now. Global memory shortage is what's happening out there. We've talked about that here at McCollum on Business. Well, that's what's driving down the forecast here of Qualcomm, and that's driving their stock down today, to 7.06% right now. Qualcomm expects their fiscal second quarter adjusted earnings to be between $2.45 and $2.65 per share. They expect their revenue to be $10.2 to $11 billion. Analysts were expecting the revenue to be at $11.11 billion. So their expectation down underneath, or their guidance is underneath that expectation level. And their earnings were going to be, the expectation was $2.89 per share. So their expectation, their guidance that they put out, 20 cents below that level on the high end of their range that they have. And it's all about that global memory shortage out there. And Qualcomm down 7.24% based off of that news. And we're going to look at a couple cosmetic companies today. Right now, we're going to look at Estee Lauder. Coming up in a little bit, we're going to look at Elf Beauty next time we look at the stocks. But Estee Lauder right now, well, yeah, down big today as well. 20.63% down as of right now. Pre-market trading, it was down 12% at that point as well. Their second quarter financial results did not impress out there. They reported adjusted earnings of 89 cents per share. That did top the 84 cents that was expected by analysts. Their revenue, well, that was also in line with expectations, $4.23 billion. They did raise their full-year earnings guidance. They raised it up to $2.05 to $2.25 per share. The estimates out there were $2.16 was the estimate out there. They beat their numbers out there. And Estee Lauder down 20.77% here today, even though they beat their numbers. So sometimes it's just interesting what hits the markets out there with what people are looking for within companies. As I said, when we come back later, we're going to look at another company that reported, and that's Elf Beauty as well. When we come back, O'Reilly Automotive, we're going to look at them. Well, for a couple of reasons. One, kind of interesting reporting they had yesterday. But also, they're the title sponsor here of NASCAR's second division, what used to be known as the Xfinity Series, now is the O'Reilly Series. It's O'Reilly's Auto Parts, but I'm just going to call it the O'Reilly Series. That starts this year as the Clash started yesterday. So we'll look at O'Reilly Automotive as well, and then we're going to look at a company called Bob's Discount Furniture. They have stores already throughout the country, but IPO here today. So we're going to look at them as well and what that stock is doing here as they just hit the stock market here about 20 minutes ago or so on its initial trading day. So that's what we're going to take a look at when we come back later. But first, right, you saw that Bitcoin number there. 66,000 is what it's trading at here as we are talking about it. And interesting enough, this is the lowest level that it's hit since 2024. And keep in mind, it was trading over 100,000 for several months last year. Selling pressure is intensifying on a Bitcoin specifically, and that's because Treasury Secretary Scott Bessent, well, he not only signaled, he flat out said that the U.S. government would not step in to support the cryptocurrency market. Specifically, he said he can't. Scott Bessent, the Treasury Secretary, was in front of the House Financial Committee on Wednesday, and that's Congress, folks, out there. And he was asked if the U.S. Treasury had the authority to buy Bitcoin or any of the other cryptos. And here's his exact quote: "I do not have the authority to do that. And as chair of FSOC, I do not have that authority," unquote. That started the decline in these stocks as well as they are happening right now. And the decline was fueled by the broader selling pressures of the market. Obviously, when everything else is down, they tend to go down as well. But there was also a warning from a notable investor out there, Michael Burry. He said a sustained decline in Bitcoin's price could, quote, set in motion a death spiral leading to massive value destruction, unquote. And that's what I've been saying all along. You're going to start to see some of these large, big companies out there who have a lot of money into Bitcoin just cut their losses. And when they start selling several $billion in cryptos to minimize their losses, you're going to see almost like a panic set in on these cryptocurrencies. That's the threat right now happening with cryptocurrency, specifically Bitcoin out there. So keep an eye on it if you've invested in it. Hopefully, obviously, you got it before the 66,000 level is. Not sure if it's going to go back up and how quickly it'll go back up as well out there. And then this morning here, right, we get more government reporting layoff plans for the companies. Well, they hit their highest January total since way back in the global financial crisis in the mid 2000s. Hiring intentions reached their lowest since the same period. We get that news here today from that outplacement firm, Challenger Christmas, and I forget the other name on there. And everybody just refers to them as Challenger. Challenger Gray and Christmas is what it's called, if I remember correctly. U.S. employers announced 108,435 layoffs for the month of January. That's up 118% from the same period a year ago. That's 205% from just last December in 2025. The total marked the highest for any January since 2009. The economy then was in the final months of the deepest downturn they had since the Great Depression. That was that financial crisis. At the same time, in terms of the hiring, companies announced that only 55,306 new hires are out there. Also, the lowest January since 2009. That was actually, ironically enough, when Challenger began tracking all this data. The crisis recession officially ended in March of 2009, and we're apparently in one now as well, if you go by this reporting. So the recent narrative has always been, and we've told you about this, we're in a no hire, no fire labor market out there. The Challenger data suggests that the layoff part of the equation, well, it could start getting worse here moving forward, as that's what the numbers are telling us with this specific report. Other reports, government reports, aren't telling us that yet, but these private reports are starting to show that out there. So got to pay attention to that on the layoff side. But then in a separate report that was released earlier today from the Bureau of Labor Statistics, they reported that job openings fell sharply in December to 6.54 million. That's 386,000 down on a monthly basis. It's down more than 900,000 from the October level at that point in terms of job openings. Openings are at their lowest since September of 2020 out there in the market. This decrease in available positions put the ratio of available jobs to unemployed workers. That ratio is now 0.87 to 1. It's down because it used to be at 2 to 1 at its peak in mid 2022 at that point. So we're getting some terrible jobs and reporting jobs availability and even layoff numbers here coming in. And look, the government reports are delayed here this month with that partial government shutdown, but we'll have to keep our eyes open and peeled here going into February on what the market is going to do moving forward. And now let's talk some company news out there. Volkswagen officially overtook Tesla in sales of fully electric cars in Europe in 2025. This information comes to us from a company called Jato Dynamics, JATO, for those of you wanting to look it up. This report came out this morning. Obviously, this is a big deal to Tesla because they were overtaken in China by that Chinese company BYD. So they've lost the China market. Now they've lost the European market in terms of overall electric vehicle sales. Jado did say sales of Volkswagen brand battery electric vehicles in Europe, they rose 56% last year versus 2024. Big, strong sales of its new version of the ID.7 is that model for Volkswagen that had huge sales in Europe. Registrations of Tesla cars, well, they dropped 27% in that same period. One up 56, one down 27. That also tells you people were not buying Teslas, right, in equal amounts. People were leaving Tesla, but also more people buying electric vehicles, not named Tesla, on top of it, with that 56 to 27% difference. Volkswagen sold 274,278 electric vehicles in Europe last year. Tesla sold 236,357. So the big difference here from those numbers, EVs made a significant step forward in terms of sales in Europe in 2025. Fully electric car registrations, well, they jumped 29% in Europe compared to the previous year. Overall car registrations, and we have the same type of a ratio here in the United States. So electric vehicles, 29% increase in registrations. But overall car registrations were up by only 2.3% in 2025. So EVs still are their growing number, but there's still a small number of cars being registered here. Not only here in the United States, we have a similar ratio, but also there in Europe also. Now we got to get into the segment of the show that's just no fun out there. We can spend the whole show talking about things like this. There's a company out there called Catalyst Brands. They own a bunch of different types of stores and everything, but they also own the license to operate Eddie Bauer stores. You know, the clothing stores here in North America. Well, we do know that they're preparing to file for bankruptcy protection. And that is kind of leaking out there with sources, and the filing could cause the company to shutter all of the North American Eddie Bauer stores. Now, interesting enough here, Catalyst Brands oversees a bunch of brands, right? Lucky Brand, Aeropostale, Nautica, Brooks Brothers, even J.C. Penney's is is in their envelope now. They have not confirmed the details of the filing as of now, but it is out there of a potential filing that rumors happened last week, and they're saying that could happen as soon as this month, specifically for the Eddie Bauer brand. None of the other brands reportedly under Catalyst that we named there will be affected by this potential filing. Interesting enough that just the Eddie Bauer stores themselves, the filing would not impact Eddie Bauer's manufacturing, their wholesale, or even their e-commerce operations, or even the retail outside of the U.S. and Canada, because another group owns that rights to that. Authentic Brands Group owns Eddie Bauer's brand and IP worldwide. So we're just talking about stores specifically here, which obviously stores mean loss of jobs coming up as well for them. And it doesn't get any better out there. Darden Restaurants, well, they announced yesterday that they're going to close its Bahama Breeze chain, close the chain, folks, after nearly 30 years in operation for Bahama Breeze. So they're all going to shut down permanently 14 of Bahama Breeze's 28 restaurants out there. They're going to convert the other ones to other Darden brand restaurants as well. So 14 of 28 completely gone, the rest being converted to a different brand there within Darden restaurants. Restaurants are struggling out there right now, and restaurants that are designated for the permanent closure, those 14, they'll continue operating through April 5th, according to Darden. The conversion of the remaining 14 locations is expected to take 12 to 18 months. Those restaurants will continue operating until they have to shut down, for instance, for the conversion process, and then reopen up under the new brands. Darden did not specify which brands the Bahama Breeze locations will actually be converted into. The company's portfolio, this is Olive Garden is their big one here. They also own Yard House, Ruth's Chris Steakhouse, Eddie V's, among a bunch of other restaurants out there. So, Bahama Breeze, a brand going away here in the next year or so, and doesn't get any easier on the media side of things either. Journalists out there, because the Washington Post, there's some rumors for a while here, and people kind of caught on because of the Olympics coming up, when people in the Washington Post weren't allowed and allowed to make plans to travel to Italy to cover the Olympics. Kind of the rumors started at that point a couple weeks ago, and it's official. They've laid off 1/3 of its staff yesterday. They completely eliminated its sports section, several foreign bureaus within its organization, but even its books coverage. No more Washington Post book coverage out there. And this is a widespread spurge, deeper than people thought it was going to be. And obviously, a big blow to the media industry and journalism as a whole as well. The Post executive director, his name's Matt Murray, he called the move painful but necessary, and he put the outlet on a stronger footing in what to weather changes in technology and user habits. And like I said, the interesting thing about this is the rumors came up about this because of the Winter Olympics. When they were told they couldn't make reservations, when they were told they couldn't travel over there for the Winter Olympics, people instantly in their minds went, we're about to be laid off, right? But the thing that is amazing about this was everybody thought it was coming on the sports side. The deepness of these cuts were actually more shocking than anything yesterday as well, because virtually every department within the Washington Post newsroom was cut yesterday out there. So it's getting worse out there. Is these big staple newspapers? That's Amazon founders, right? Company, the Washington Post. There, the media, if you can't adapt to the way people want to read and watch things now, you're just not surviving out there. Their readership, I was reading, is halving every year. Their readership and people subscribing to the Washington Post, they're just bleeding money left and right as they're not able to adjust to the style differences of everybody out there. And another one that's they're adjusting to the way we deal with stuff out there. We're talking about Minute Maid here, right? Minute Maid, well, way back in the day of 1946, yeah. They changed the way you can have beverages back then, orange juice and lemonade and stuff like that. They started shipping cans of frozen juice around the United States, which means here, folks, this is the bad news. I love the Minute Maid pink lemonade. Open that can up, put it in your pitcher, add water, stir it all up, and I can't get enough of that. But now we are looking at it 80 years later, and well, Coca-Cola is their brand's parent company now. Well, they're halting sales of frozen juice concentrates here in the United States and Canada. They say they want to focus on fresh juices because that's what we as consumers are preferring right now. So they're making the change and discontinuing this brand to move toward the fresher side of things that we're calling for as consumers. So these frozen juices, these are the ones in the round. You see it on your screen if you're listening to us, the ones in the frozen section and in the cans. Well, they several variations of orange juice, lemonade. Like I said, I'm partial to the pink lemonade. That's my favorite. It's going to be discontinued by April. Inventory will be out there and available while supplies last, according to, as I said, Coca-Cola is the parent company now as well. And Americans who wanted orange juice without, we're Americans. We could be lazy. And you don't want to actually squeeze fresh fruit. Well, you can crack open a can and squeeze it and watch it just pop out into the bottom of the pitcher. I have a pitcher to this day for my pink lemonade and Minute Maid, by the way, just so you know. I just like to put that out there. The concentrated juice obviously mixed with water to make it ready for drinking. Coca-Cola actually acquired Minute Maid way back in 1960. Minute Maid, 13 years later after that acquisition, they introduced ready-to-drink orange juice, which was sold in a refrigerated case instead of the freezer, which you kind of have now the fresher stuff out there. Now you've got other competitors like Tropicana out there doing the same thing as well. So then that allowed you to not mix it up in the early 70s, right? You didn't have to put water to it and mix it up. It just came pre-mixed. Minute Maid added lemonade and fruit punch to its lineup back in 1980 for that. So Minute Maid going away as well here, folks, as we look forward to things and the way the world is changing today with our media, with our companies, where we shop, and even what we shop for out there. And I might have to go home and pour one out for my pink lemonade, Minute Maid, later on today. But when we come back here, we'll keep it rolling. We're going to talk about sports betting, right? It's the Super Bowl week, and our governor wants to do what other states have done in terms of taxes on sports betting. We'll give you an update on that. Plus a bunch of local stories with the Fiesta Bowl and there's some question marks on the Fiesta Bowl's place within the hierarchy of the college football playoffs. We have some clarity here over the next 2 years at least. After that, it becomes a question mark again as well. And you want to stay tuned. There's a famous thing out there because of its face. We'll talk about that coming up as well. You might be all the rage right now on that, but we'll talk about that coming up also. So come on back. McCollum on Business. And we're back here, McCollum on Business, live 11 o'clock here, Monday, Wednesday, Thursday, Fridays. Tuesday, of course, we do the morning business show. 7 a.m. is when we go live on Tuesdays. We're getting good results from that. You guys like it. We're seeing the ratings on that actually up here live as well. So we have some decisions to make here if we're going to move this show to just mornings. Possibility of doing it mornings and afternoons. So we got to work some stuff out here. But for now, 11 o'clock here today. And then tomorrow, of course, we'll be back here as soon as we're done. Of course, on demand here at Robat TV. And then on the YouTube page as well of our production company. Then, of course, the main event in the can for today. Uncle Lou joined us, talked some prop betting there on the NFL. We talked some UFC with him in the second hour. I got you for the whole first hour today. Dale Hillestray was up, but that's on demand now at, of course, Robat TV on the YouTube page as well. Free podcast, Google, Spotify, Apple, iHeart, all your favorite podcast systems. At TME Sports Show is where you can find that. Like and subscribe those for us, even if you catch us here at Robat TV, of course. The pit stop, the Clash, officially got in last night. I got a little bored with it as an exhibition race. Next up, our season starts here for NASCAR February 15th. Pit stop will be debuting for 2026 coming up next week as we go into the Daytona 500. For the season, IndyCar starts in March, so join us here. Follow me at the Pit Stop Talk as well on social media on X to get all the updates out there. And, of course, show coming your way. And when that goes, it'll be on demand here at Robat TV, as well as on demand on the YouTube page as well. There is a free podcast for the Pit Stop. It's at the Pit Stop Talk on all your favorite podcast systems out there, debuting next week as well. And then the Real Matrix, the Angry Patriot, just wants you to come in with an open mind. New episode coming this Friday. 10 a.m. is when the new episodes hit here, Robat TV on Fridays. The podcast system at The Real Matrix on your favorite podcast system will bring it up as well. We're 16 episodes in here this week. Is our 16th episode of that show. And I follow them on a podcast system, your favorite one as well. As I said, The Real Matrix. You can follow them at Robat TV here on demand, 10 o'clock. And YouTube, unfortunately, kind of has to go away with some of their restrictions. They don't like some of the content there. So we're moving it over to Rumble, and that is available and coming up here as well for this week, putting the finishing touches on that page for you there. So you'll be able to see it on demand there at Rumble as well. Already getting some views here for the couple episodes we have up as a test. So something to keep an eye on here as that is rolling out as well for this weekend. With all that being said, we have other big issues here on the business show, and that is, of course, what's happening with the market. Let's get into the Market Watch. Yeah, everything's still down. It's going to be down for the rest of the day. The question now is when is it going to snap out of this sell-off that's happening as well? NASDAQ, third day in a row that it is cratering out there as well. S&P down today. Dow way down as well. 426 points down for the Dow. S&P 500 down 90 points right now. Yeah, NASDAQ down another 267 points here today as well. Russell 2K, that small cap index, down 41 points for it is. The Russell 2K has been huge dropping numbers over this week as well. And then there's Bitcoin. No free fall like Bitcoin right now. Even worse than it was earlier when we were talking about it, 65,756 right now. If you missed the beginning of the show, we kind of did the story on what is happening with Bitcoin at the top of the show is our first story here today. We are dangerously close here to big institutions cutting their losses and getting out of Bitcoin when they were buying at the 80s, 90s, 100,000 levels here. And if that happens and people start unloading billions of dollars of Bitcoin, we're going to have major losses here, and more so here with a sell-off coming up. And the government's not going to bail Bitcoin out, at least as of now, according to what we've heard out there. Stocks we are paying attention to right now that hopefully can give us some more vibes. We looked at Estee Lauder earlier, who was down 20%. So let's see what Elf Beauty is doing here today. 6.35% down for them right now. Now, a lot of this is sell-off. They were up in pre-market trading about 5%. Yeah, they raised their full-year guidance. Elf is calling for adjusted earnings of $3.05 to $3.10 per share. The estimates were only $2.87, so blowing that number out of the water in terms of their guidance. Fiscal third quarter results did top expectations. Elf reported adjusted earnings of $1.24 per share. 72 cents is what analysts were looking for at that point as well. Their revenue of 490 million, well, it exceeded the 460 million of the consensus estimate out there. So Elf Beauty way up. Their stock is down today due to the sell-off more than anything. But Elf Beauty coming in with some beautiful numbers, if you will, here earlier or yesterday afternoon as well. O'Reilly Automotive, as I said, something I'm paying attention to because they're taking over the second tier of NASCAR, right? The Xfinity Series is now known as the O'Reilly Series, and O'Reilly Automotive down 3.56% here today. They were down about 1% here when the market opened, so not due to the sell-off here, but they also had disappointing fourth quarter earnings. They earned 71 cents per share. Well, the estimate was 73 cents per share. The revenue was $4.41 billion. Missed that as well coming up for them. They did also estimate their guidance level. They said they'd earn between $3.10 and $3.20 per share. The expectation was $3.32, though, for the entire year. Disappointing sales results here for O'Reilly Automotive, 3.52% down as of right now. And then finally, Bob's Discount Furniture. This stock probably isn't going to be available yet. It just went live, hitting the stock market today. Out there, trades under Bob's is what it is. Bob's Discount Furniture is making a big play here with this IPO. They opened here on the stock market. They opened flat. $17 is where they open. I can tell you right now because the graph isn't updated. That's how new it is. There's always a lag here in what we report to you. It's at $17 still here today, right now. So they were founded back in 1991. They've grown to 206 showrooms across 26 states. So now they're planning to double that store count. They want to go over 500 locations by 2035, and they've hit the stock market here today. And IPOs are good. They're fun to watch, usually. Now, they're coming at $17 was within the expected range. It was $17 and $19 is what they expected it to hit the market on. Did come in at the $17, but just flat here over the last hour that it's been on the stock market as well. So there you go, an IPO for you. I wanted to make you aware of out there as well. We're waiting for Amazon to report after the bell today. See what their numbers do here in terms of the stock market in this current sell-off period that we are in. And let's get into some local stories here as well. And we know that gambling is big here in Arizona. Like, for instance, last year, $8 billion were wagered on sports gambling here in the state. And it's continuing to grow as well. State leaders, though, well, they're not happy with the current piece of taxes that they got. They want to get a bigger piece of that $8 billion in growing amounts. And obviously, they want a higher tax rate on it because they want to fill major budget gaps that they currently have in the state. Right now, it's at 10% of taxable revenue from the popular sports betting sites. There's only 4 that kind of dominate most markets. Then everybody else are kind of stragglers behind that amount. 10% is the taxable revenue that we get right now. And, that the top four is like 3/4 of the amount. So 10% of the DraftKings, FanDuels, et cetera, is what we get. Well, Governor Katie Hobbs, she's proposing 45% tax rates now. So 10 to 45% against these companies. Because they want to add another $150 million, of course, to the state's tax base. And $150 million will cover some of those gaps that are out there and continue spending to happen right now. So the big 4 in Arizona that dominate the market is DraftKings, FanDuel, Caesars, and Fanatics. They account for about 3/4 of the betting market. And even then, DraftKings and FanDuel are even bigger, are the bigger percentages of that out there. We've seen other states, as we've talked about here, go from a low percentage, 10, 15, some states as high as 50%, to the point where some of these companies are putting tax fees into their betting amount. So I think it's Illinois. It's like a quarter. Maybe it's New York. But one of those two are charging a quarter for every bet you took. They're just calling it a quarter fee, to help cover some of those taxes out there. So that 10% rate that we have right now in taxes, it's the 5th lowest in the nation for states that do allow online sports gambling. As I said, New York, Illinois, I know Rhode Island, and I think Oregon recently just transferred their taxes up to 50% at that point in time. The tax rate increase would not apply to Arizona's brick and mortar casinos, only the online sports books that take in the majority of the money. So they're focusing on those four that take the three quarters of the amount would go up to the 45%. And like I said, we've seen in other markets, then those companies charge a percentage of fees or a certain dollar amount for every bet you place as well to help cover that amount. They only operate off of 2 to 3% margins. Now, granted, all the major ones, $8 billion is coming in, so they're making money, right? But obviously, a 45% tax threshold eats a lot into that. And will they be able to cover that, or will you, as a sports gambler, get it on that side? So, something to pay attention to and think about here as we go into this Super Bowl weekend. And I talked about this on the main event yesterday, the Fiesta Bowl. It's fully announced. We've got the 2027, 2028 college football playoffs, quarterfinals, semifinals, and final schedule here for 27 and 28 years coming up here as well. And we do know that the Fiesta Bowl is going to host the quarterfinal playoffs in both years at that point, as where we're going to be hosting it. So the Fiesta Bowl has been around since the early 70s, 1971, 72 timeframe. And it was created because Arizona State couldn't get into any bowls across the country. So they said, let's just create one for here. That's how it was born. And it's turned into a giant event. Even before, right, we had Super Bowls, the All-Star games, Final Fours here. All of that's kind of come out as the time has gone on. But it all started with the Fiesta Bowl. So the interesting thing here is after this year, there's some question marks on the Fiesta Bowl's place in the college football playoffs. We know that they're still in the quarterfinals here for the next 2 years, so that answers those couple questions. But after 2028, discussions are going to have to continue on the Fiesta Bowl's role within college football beyond these next 2 years here. So, can they keep it as a high tier bowl? And look, it's going to take money. Places like Las Vegas, they're bidding, they're putting big money into these games to host them. Dallas as well over there, Jerry World, right, where the Cowboys play. You're going to have to compete on that level there, and is Arizona continue to do so as well? They do say that the Fiesta Bowl committee completely, $200 million worth of economic impact each year into the state of Arizona. Now, that does include both the Fiesta Bowl and the Rate Bowl that they're in charge of as well. That combined is $200 million in economic impact. So next 2 years, we know the standings. We'll have to see after that if we continue to stay as a high-level bowl game moving forward is kind of the question to keep an eye on here for you sports fans and also people fans of money coming into the state. And let's go down to Tucson here. We talked about RTX yesterday and getting that big deal with the Pentagon where production for a lot of the Tomahawks, the interceptor missiles are going to be upped here as the United States wants to restockpile a lot of their dwindling missiles out there. Well, now we get this straight from Raytheon's website here, RTX's website. Raytheon has successfully completed a ballistic test for that U.S. Army's next generation short range interceptor. This is the NGSRI that we're talking about right now. It's going to replace the Stinger surface to air missile as it comes out. So a successful test has happened here. A second successful test of those NGSRI rockets from Raytheon. So this test here demonstrates the interceptor's ability to track drone targets, even be fired from a man-portable launcher. Raytheon funded the test to demonstrate technical maturity and even collect critical data ahead of the program's first flight test program that's coming up here shortly as well. So some good news there from Raytheon down there with this missile test and everything down there. So they also, in 2025, Raytheon with Northrop Grumman did multiple successful tests of their highly loaded grain solid rocket motors. Those are the HLG ones there as well. So a lot of success happening down there from Raytheon right now in Tucson. And finally, I'm going to leave you with this story here about crying horse and their frowny face out there, folks. Yes. It's a fire engine red plush, is what is all the rage on the social medias. Your kids might have come to you about this. Yes, look at this. That's them on the screen if you see them. Manufacturing error. It took the smile and made him frowning. Yes, that's supposed to be a smile on these horses as well. So now they call him the crying horse online. So if you heard somebody talking about it, this is what they are referring to. This stuffed animal was created in celebration of Chinese New Year, which kicks off on February 17th. Uh, Rather than having a smile and rosy cheeks, you can see there, the horses bear a frowning face as well. Look, China's even can't even produce their own stuff properly, right? For their Chinese New Year's. So a worker sewed its mouth upside down by mistake, and lots of them as well out there is what they've done. So it's a happy accident. Obviously, take your frowny face and turn your frown and turn it upside down. The faulty plush horses have been popular among companies, among customers. Excuse me. They say, we will keep selling it because this crying horse really suits the reality of modern working people. They aren't going to stop working once the new year passes, right? So they took something negative. Normally, those would have been thrown away, but social media got a hold of it and people love it and they want their frowny face horses going forward. Now, not everybody's up on the frowny face horses as well. There's actually somebody with Vision Plus Toys, a toy shop out there. They told Reuters that they think the frowny horse toys are ugly, and she doesn't want to sell them. Now, of course, if you want one, well, you can go to the resale sites to find it as well. Only sold in China originally and everything, but if you can't visit the Happy Sister stall in Yiwu, China, well, they have appeared on retail sites. eBay was one that had several I saw when I looked into this as well. It sold for about $14 to $30 on eBay is the pricing, so not crazy, as of yesterday, as where you could see them at those prices. Some eBay listings offer the crying horse and its correct counterpoint or counterpart with the smiley face. So you get one frowny and one smiley as well for you. One crying horse version has popped up on Amazon for $13 as well. So not expensive yet. If these stop being sold, these will skyrocket up there. But folks, let this be a lesson for you. Don't just, if a mistake's made, don't just get frowny about it and say, oh, we've screwed up. No, turn it into a marketable selling opportunity like they did with these crying horses out there. With that being said, we're all done here on McCollum on Business Thursday edition. We'll be back tomorrow, 11 o'clock, for Friday's edition and get you ready for the weekend. Come and join us, would you? Thanks for joining me here today. Enjoy your Thursday night. We'll see you tomorrow, everybody. Getting ready for the Super Bowl. We'll do a lot of that talking tomorrow around here with the main event. And, of course, McCollum on Business. So come and join us. We'll see you then, everyone.